All right, guys, welcome back to the Agent Investor Podcast. I'm your host, Tom Caffarella. We've got a special guest out of Orlando, Florida, Todd Schroth. Todd, how's it going?
Doing great. Thank you.
The wonderful market of Orlando. I will be there in 2 weeks. I'm headed to Disney with my family of six. So
awesome. I'll have fun. The crowd should be died down by then. Thank God.
yeah, I hope so. We'll see what happens. But
Yeah.
My third time back, one of the things that keeps Orlando in business. So
Yep.
I'm excited to kind of get you on the show, kind of talk a little bit about your story. Can you give us like a little bit of background? Like, when did you get into real estate? Why did you get into real estate? All that good stuff.
For sure. I'm a second generation real estate agent. I had my parents, my mom's now 50 something years as a licensed realtor, did a lot of investing, watching them doing it growing up and helping them do the tear outs and stuff. So I actually enjoy buying properties now to let my kids do the same thing. Like, guys, if you're pissed off at me, grab a hammer, let's go destroy some drywall. It's all good stuff. We have a renovation going on right now, which is why I was a little bit later too, because we're checking on the job and dealing with electricians who are behind on things. But no, so that's my little background. I started buying real estate right out of high school at 19 years old or 18. And just I had a buddy that was doing it. I said, "What are you doing?" And I never planned on even getting into this business. I was going to college for something else and ended up dropping out of college because of the real estate. We were doing too well with it.
Yep. And what year was that?
So that was 1996. No, 1995.
95. So that was like right when everything was coming out of the recession, right?
Correct. So we were buying stuff for 30,000 that was worth 70. And that was back when stuff was really affordable. But we were paying 18% on the interest rates.
Yep. Yeah, no, totally different market back then. So now, did you finish college, or did you say like things are going so well, like I'm just doing real estate and that's it?
I didn't. I started to go back to college, and then I just, it was too much. We were too busy. And, 19 years old, flipping 8 houses in 1 year, making over 100 grand doing that. It was like, what's the idea? I wish I would have finished for the fact of getting the business education side of things. Yep. But, 47 now, so there's obviously no point in doing that. We're learning street smarts at this point.
Yeah, absolutely. So, you were focused on flipping in the beginning. Like, what were you focused on? Was it like buying them to keep, buying them to flip, like everything? It didn't matter.
So we were doing everything. So the private money we had, our goal was to get them, fix them up, and then refinance the private money out, recycle the private money to buy more stuff, and then keeping, probably 3/4 of what we had as rentals, and then flipping the rest. And because looking at the long-term wealth side of it now, 5 years later, the market was taking a big crazy crash. So we ended up unloading everything, which I wish I would have not done that, because we'd sit on, a lot of equity or a lot of cash flow at this point in life, or we would have recycled that into something else. But our goal was to, between flipping and renting and managing for other investors we flip to.
So talk about, like, because we're in a market right now where asset prices are super high and people are worried about, like, hey, what if prices go down, whatever. So you accumulated some rental properties. Asset prices started to drop. Now, you talked about the fact that you wish you held them. Could you have held them? And like, what would the strategies have been for you to be able to keep them through that down market?
I think the biggest thing for us to be able to keep them was to have that secondary, when that was my primary business at the time. I had 2 businesses running. One was a telemarketing company that we started, and the other one was doing the flipping. When I got burnt out from doing a massive amount of flips, because we were doing a couple hundred a year. And it was just me and a business partner managing everything. We were in our early 20s, so we had nothing else to do except for that. But getting over leveraged. So to make sure you do it right, buy the properties right, buy them in the right areas. And, because area matters. I mean, that's gonna be the quality of tenant, the turnover, the damage to the properties, all that stuff. We bought in an area where there was a lot of rentals that we turned into. I think we had 80 units in that one spot, like literally within a 5-block area. We were just buying these duplexes from these old guys that had built them back in the 70s. And it was all Section 8. If one person didn't, it damaged something that we were refusing to fix because it was their boyfriend broke it, they would hold up the entire rent of all the units. And so you're talking $300 repair on a $350 rental. So that was what was killing us. We got over leveraged in that area. I think was part of it. But buy right and buy in the right areas is the biggest thing I can tell everyone to focus on. If you do Section 8, make sure you focus on Section 8 type properties, but find the right Section 8 tenants. Or if you're going to the white collar, make sure you buy them where they cash flow correctly.
Yeah. It's funny that that's the piece of advice that you gave, because I'm going through that myself. So when I started out maybe 15 years ago, we bought a bunch of rentals and we ended up unloading them because they were just too difficult to manage. They look really good on paper, but the problem is, like you just mentioned, it's like all of these costs that you don't think about, like you said, the repairs. Well, the repairs are higher in those areas, but like on paper, you don't put that the repairs are higher. You put the repairs are the same as everywhere else. And so what we ended up doing, and we're going through, and I'm just mentioning my stuff because this is what we're doing now. We sold a bunch of it. Luckily, the asset prices are still up, and now we're buying bigger buildings in nicer areas.
Yeah.
And so we want to have a quality of tenant. Like I've got 4 kids. My partner has 2 kids, and we want to have rentals where we can say, okay, if our kids took these buildings over, we'd be happy for them to kind of take them over.
Yeah.
But anyways, that's my story. So back to your story. So you did that. The market kind of, took a downturn. Throughout this period, as you're flipping, you're keeping on some rentals. Were you licensed at any point, or were you just investing?
No, I was not licensed at all. So when I got to the point where my mom's like, you're going to be 50 before you're 30, because that's all I was doing. I was stressed out, too much stuff going on, just picking too much stuff up, because the inventory game was great then. You could buy stuff 50 cents on the dollar. It's not like it is today. And that's through the MLS. That's not even through like wholesalers.
Yeah.
So now, when I got 25, I'm like, and I had a telemarketing company as well that I was running. And so I ended up shutting that down because it was just, again, too many things going on. Let me just back in. I want to get back into real estate. So I said, let me get my license. First thing the guy says in the real estate class, who's an investor? A couple of us raise our hands. You guys need to get out of here. You don't want your license if you're going to invest. I'm like, no, I want to do sales. So we stayed in the class. We graduated, we graduated the 4-week program and started selling. And here I am 21 years later.
Now, why did they say that, do you think, out of curiosity?
Liability, because as an unlicensed person, I could say the demographic, I could say a lot of things and not get in trouble and deal with the ethics complaints. But as a licensed person, you have to be careful what you do.
Mm-hmm. So at that point, when you decided to get your license, were you thinking that you were going to build like a successful sales career, or were you just kind of like, oh, I'm going to add, some sales here and there? What was your plan at that point?
So my plan at that point was to get strictly into sales. And my old business partner opened up a home investors franchise. So I was like, well, I'm going to just tap into my investor network and build some sales that way. And so that became my next clientele, was the investors, be the realtor for the investors. Mm-hmm. And did that for the first couple of years, which is great. And then we obviously built our business, and, we spent more money on marketing, and, it just kept going.
Yeah, we hear that a lot on this show, that, people get their license and they end up servicing real estate investors and build an entire client base from that. What type of investors were you working with? Was it fix and flip? Was it buy and hold? Was it both? And then how were you attracting them?
So I was doing those just basically through like the investor associations. Like Orlando has CFRI, which is Central Florida Real Estate Investors Network. And so I'm going to there to keep my name in the pot. I'm also doing some commission programs for the investors because I want to see the continuous from them. One investor I was doing 30 listings a year for.
When you say commission programs, you're saying doing them for a little bit less money?
Correct. So average buyer, back then, average buyers, they just make it 3%. I'm taking 1.5% on the listing side. And then not doing the full blown, like, hey, I'm going to do open houses every weekend and do all that stuff. But hey guys, we'll get an MLS, we'll get all the photos shot, we'll get everything rolling for you, and get this thing run contract to close, manage it so you don't have to. But you also give the discount because of the volume that they were giving you.
Yep. Okay.
So, I'm still today at 6% listing commission. So we take a discount here and there, but it's just because of repeat business or because we want that business. But otherwise, we're going in at 6 on everything. Or if you want to talk on commissions on stuff, but when the investors are a repeat client, we're trying to give them a little bit better deal. and we know they've got their money they want to make in the back. And I appreciate the continuous business we got from them back then.
So at that point, once you started to like service investors and stuff like that, were you doing any investing yourself, or did you kind of just like shut down the investing part?
I shut down the investing part to get the real estate business rolling, and did that for 5 years. 2005, we started buying some properties again. What happened? 2008 hit. So we sold some of the investments we had. Luckily, we were able to cash out. We had a couple that were left over. We short sold. Fast forward a couple of years, got back into the investing side, and we're not doing it as like heavy volume of flips. We'll do 1 to 2 a year, but buy them to keep them to rent. Why not? Because we have first dibs at the inventory. I bought my own listings as rentals, because we see some future on the other side of it.
Yeah. And so what's the strategy now for you? You're saying, are you still accumulating those buy and hold properties and you're selling at the same time?
We are. So I'm running a real estate team now. So I've got 12 agents that work underneath me. I've got a stack of admin, and it's just another part of the pipeline to find the wholesale properties, or part of, if the listings, they don't get what they want, but they're willing to take a cash offer, we'll throw in there and potentially buy it as an investor, not to flip it, but to hold it and rent it out. So our goal right now, the problem right now is I'm not able to buy stuff cheap enough to be able to flip it and actually put the quality work into it and make the money we want to on the back end.
Yep.
I make more money selling houses on one deal than I would on a house that I'd flip, because you think about the mortgage, the repairs, and the overruns, and I'd rather just go sell a $300,000 or $400,000 house, make 10 or 12 grand.
Yep. Yeah, it's an interesting market that we're in. Like we do like about 150 flips a year, and all of our stuff is off market. Like we don't even look on market. We have a complete like marketing funnel where mailing, TV, pay-per-click, all that kind of good stuff. So like we won't even look on MLS anymore. I don't even know if you can make that commission at 10 or 12 grand if you're buying on MLS anymore.
No, it's true. You've got to have the outside platforms coming through, because there's not, there's not enough equity in the properties right now, because, I could go stick it on the MLS and it could be a dump and people are going to pay full price for it.
Right.
And it's just not a flip property. And the stuff that I see being flipped, they're doing such shoddy work on it that I wouldn't even be embarrassed to bring a buyer in there.
Yeah. Yeah, it's definitely interesting. I mean, you've gone through a couple different market cycles, changed gears with your strategy with the market. So with that being said, like, what's your focus now, and like, what are you trying to do kind of moving forward?
So our goal, keep the rental base. I don't want to be a landlord with 100 rentals, but keep 10 to 20 rentals at a time. And if we want to sell them, upgrade like you're talking about, to bigger properties, get into the storage facilities, get into small apartment buildings, things along that line. And then if we see other stuff, potentially push it off to our agents on our team, and or other buyers that we have in our database that are long-term investors. Bring it over to them.
Now, for your real estate team, do you bring them in, teaching them how to work with investors, or are they just kind of like more traditional type of agents?
They're more the traditional type of agent, but on that side, I would still bring them in. The guys that talk about wanting to get involved in investing, I bring them in and try and teach them as much as possible. And because they're the ones coming to me about it, so I want to make sure we're bringing the wealth back to them.
Mm-hmm. Okay, makes sense. So obviously you've done a ton of stuff in your career with investing. I mean, you started, earlier than pretty much almost anybody that I've had on this show. And one of the biggest things that a lot of us deal with, myself included, is like knowing that you should invest, wanting to invest, but kind of not jumping in. Obviously, you didn't have that problem, but what piece of advice would you give to an agent that knows that they want to invest but hasn't yet?
It's like buying your first home. Just take the leap. And every first time buyer is nervous. Find a local investors network in your market. Go to it. Learn from other investors. If you see a book from somebody about a property that they're trying to flip, do your own research, because that book's to make it look pretty. The numbers, you want to make sure you do your own research to run values and run your own construction analysis, especially right now, because everything is, we just bought a second house up at the beach, and we're 20% over budget on everything because of the market and the inflation on all of the commercial power of the construction products. So make sure you budget that stuff in, and, find private money, because that's going to be the biggest thing, is access to cash. And, the guys that will fund you, 1, 2, 3 deals, and not say, I need you cashed out in 60 days.
Mhm. So how did you find lenders throughout the years?
Through the investors network. My buddy that I was my business partner from high school that we started, he had a connection going in, and then as we were buying more, we needed to find more connections. So we went to the local investors network and find the guys that are out there. A lot of attorneys will put their money into a pool and have somebody manage it for them. You'll have some doctors that'll do the same thing, and you'll just find those guys at the investors networks that are kind of like mortgage lenders, private mortgage lenders for these guys. They'll charge a couple points up front and then put the money out there for them.
And so with all of that being said, like, again, you've done so much different things. Like, what's the biggest mistake that you made with investing that you would want somebody that's listening to this to learn from and not repeat?
So the biggest mistake that I think I made was getting over my head, but also I could have repivoted and managed some of the assets I bought early in my career. And especially like in 2000 when we unloaded everything, and I'm watching stuff that I sold for 40, 50 grand, 2 years later sold for 150 because the market was taken off. Have the cash backed up in your account. So if you do have to have a pivot on something, you've got some financial, backing on there. That's the biggest thing, is having the cash on hand.
Yeah, I think that's like one of, I always ask that question. One of the biggest mistakes that people always talk about is just not holding on to more.
Yeah.
I think we all kind of fall victim to that like, we just say, okay, I'm done. I'm going to sell some stuff. And then, you always end up better off if you just kind of like held on to it almost no matter
Yep.
what.
Yep. Exactly.
So where do you want to go with your team? You said 12 people. Do you want to have like one of the, I mean, you've already got a big team, but do you want to have one of these like massive teams? Do you want to keep it kind of how it is? Like, what's your strategy for that?
So our real estate side, I've got 12 agents on the team now. I never planned on having 12 agents before. 3 years ago when we made a brokerage move, it allowed us to expand our team financially better. And I was only a 1 or 2 person agent team with 1 or 2 admin. And now I've got 7 admin and 12 people on the team. And we're trying to grow to about 20 to 25 agents in the Orlando market, but also expand to Daytona, Volusia, Daytona, Brevard, and Tampa. So we want to actually like make little semi teams outside of our team. But locally, we want to have about 25 agents, and I've actually got a couple onboarding right now. So we'll be 15 to 16 probably by the end of the month.
And what are your agents focused on? Is it sphere of influence? Is it specific types of leads? Like, what is your model?
So our model is our goal is to get them to focus on sphere of influence, because that's where they're going to make the most money, because the clients know, like, and trust them. But also we've got a huge funnel of lead generation bringing deals into them. So if they can convert, they're going to close a lot more opportunities, because we've got Zillow Flex, Google pay-per-click, Google LSA, Google My Business. We've got a bunch of Facebook marketing going on, and then a bunch of little funnels that are out there like YouTube bringing opportunities in.
And where do you see the market going? Because another thing that a lot of people talk about is like, I don't want to get into real estate investing now. Prices are so high. Obviously, you've gone through it a little bit. Like, where do you? I know it's a crystal ball type of question, but like, where do you think things are going to go in the next few years?
Well, it's funny because I was going to say, let me grab my crystal ball real quick and I can answer that question.
Yeah.
Like everything, we don't expect the market to go down like it was in 2008 because there's too much cash in it. But I do see the market settling. And if I was to buy properties, find them, don't buy them in MLS, because you're paying too much money for them. I see investors doing this, unless again, it depends on your model of investing. If you're buying for long-term and you want to look at the ROI on it, then you can base it off what the rent is to what's there. But buy stuff if you could find it, either like courthouse or through the mailing campaigns like you've talked about, or other opportunities. That's where you're going to find your deals. You want to buy at least 10% below what the full market is right now.
Awesome. All right. So last question, and this is a personal question. So I got 4 kids. I want them to someday get involved in the real estate industry. What would you do if you were me? Obviously, you grew up in a real estate family, to encourage it without being at the same time too pushing it.
So I bought just let's go back 10 years. in my neighborhood. I'm actually, I run a farm in my neighborhood because we have 10 to 30% market share depending on, the time of year and stuff. And there was two old folks that had run the neighborhood for about 20 years, and they built the business by biking. Everybody still today knows them. They've been retired 10 years and they're in their probably late 70s. And so everyone thought I was their kid. Their kids wanted nothing to do with real estate. They have 3 boys. And what I would want to do, and I tell the kids, guys, look, when I retire from this business in 10 years, for example, you'll be 25, you'll be primed to come in here and take over. And they're like, I don't want to do real estate. I don't want to do real estate. So we're trying to make it fun for them and get them motivated about it and realize and show them that there's an unlimited income that can be made in the real estate industry. You want to be, whatever you want to do, there's caps on a lot of careers, but this is something that you can walk into a business and you can have so much fun. And look at the lifestyle that it's provided me growing up, to the lifestyle that I'm providing you guys growing up. Yeah. So try and sell it that way versus like, hey guys, let's go, sling a bunch of houses. But I tell you, my face is on everything, and I'm up at our house with my nephew and 2 of his friends, and one of the kids, I get introduced to one of his friends, and he goes, "Oh, I've seen your sign in our neighborhood. I didn't realize you're his uncle. That's so cool."
Yeah. So, that doesn't hurt, right?
No, it doesn't. And trust me, we've got branding all over our area. I mean, we're on the high school football, baseball. We're on every magazine that we can put in around here. Every spot we can throw some marketing, we're doing it. And so it's brand recognition. And the kids kind of hate that too, because like, everybody. I'm like, it's just 20 years of living here. It happens.
Yeah. I love it. Thank you.
Yeah.
So for our listeners that, want to learn more about your story or reach out to you or potentially buy in the Orlando market, because that's such a great market to buy in, what's the best way that people can find out more about you or potentially reach out to you?
So I'm on every bit of social media. I will respond to every message. It's Todd Schroth is what it's listed as. It's SCHROTH is my last name. You can call my personal cell phone. It's 407-247-4184, or go on our website, keepitorlandomoving.com, and click on contact us, and it'll shoot me an email as well.
All right, Todd. Well, I want to thank you. I know you're super busy for sharing.
Yeah, appreciate it.
All right, guys. We'll be back next week with another episode of Agent Investor. Thank you for taking the time to listen.